Most of us waited patiently for this bull run from a long time. April did its turn. It gave us 4, 5, 10x in different assets, and now, next 30 to 45 days, we would see some coins topping their second wave, meaning popping 5, 10, 20, 50x from here. That's going to be monster gains with your already existing 4 to 10x gain. That would be compounding your existing gains, right? So from here, there is a lot of money to be made in this market. This maybe, monsoon of profits. That's for sure. This can be considered as a monsoon of profits if that is happening. And the chances are high for that. Those who are prepared after a rise in early April, their average is way lower. They are positioned well in the market. They are going to get majority of the profits. The market actually went higher in April, I agree, but it went down and cooled off. Any rise with volume from here would push the markets higher. And as you can see, there are a lot of different indicators highlighting you that next 30 to 45 days can be that alt season, which majority of us were considering in wave 2. Profits as you reach the top would be better to take out from the market. You shouldn't be in the market once you are like 100, 200, 500x completely. Take some of your profits out, move it into an alternative asset where you think that's safe. Now, as we may get a long consolidation after that wave 2, it's better to understand which asset is at wave 1, which is at wave 2, and where you are in the market cycle. Say if you have 10 assets in your portfolio, you now have to rebalance that once you're reaching the top of wave 2. Now, yeah, next 30 days all the way up to next 2.5 months can make you take that decision to understand what the market is looking like. So let's look at these charts and explain like what are these stuff which is pointing us towards that profits. Now that's technical stuff, I agree, and at the same time we have positive side news, which is the current affairs, which most of the newcomers would be jumping in and looking at this and existing users if they want going to look at the market in the technical and then looking at the fundamentals to buy more. Adoption is something really great, and last month this actually came out and I kind of missed that. Yeah, I agree. Then there are some stuff which is really important when we are actually looking at the current scenario to understand your money is not kind of safe in the market, meaning financial market, there in stock market and else, where you are kind of topping through the all-time highs, and in the bank it's inflation. So you need to find something, some way where it's safe. Now tax is not a bad thing, but when you're kind of doing the right thing, do the tax incentive and then make money, and then the government comes against you putting that wealth tax, that's kind of something different. Now everyone will have different opinion, but that's going to decide a country's nature from here if they are moving into a socialist nature from there. So let's actually go through and discuss what we are looking for next 30-40 days in this market. Welcome to the Scientific Investor family, where we discuss crypto and science behind investing regularly. Now understand, we were going through this, we kind of gave you the highlight that this altcoin is going to be what we were all anticipating, and that happened. We made through that gains. Now fine, now once you actually get those kind of gains, and when you're nearing an May after the April, it's going to be like there are some assets which haven't popped out, which kind of indicates like 10x towards 40x possibility for next 3-4 months. Now that's how you position yourself, right? If you're a medium-term trader, that's what you're looking at. If you have long-term bag, it's completely positioned. If it's positioned well at the right price for the right asset, that's completely great. Now, this is XRP on a 4-hour chart, kind of zoomed in view to understand where the next support is. Now, why am I talking about support here? Because RSI has actually broken this trend and it's kind of slowly moving to the downside. MACD has crossed to the downside, the volume is in the downside, price is breaking below this support. Now the next one should be somewhere close to this area, 1.43 towards 1.33, because the moving average is also tending to move to that direction, price may get supported at that area. Now, if we look at the recent history, we can actually see that the price has moved inside that range for quite some time. That gives you an idea that the price may still respect that range. Now, stepping back, looking at a macro scenario here, we do have to understand this is happening when we are dropping like this from 1.5 to 1.3. Now, that's just a possibility. We can bounce at 1.42. We don't know even from here if we're getting more volume and demand. As the altcoin market is surging, we may get that demand, and if we are getting that demand, we may not break this. It would just be a fake out and we'll just slowly go back up. That's a possibility, right? We can't neglect that. But if you haven't considered this, now you are like, you have a little bit of dry powder. So if it drops, you are entering the market if you haven't done that before. Now, this 3-day chart actually shows you we were moving in this such a trend around bottom. But from here, after the capitulation in March 2020, we are gathering momentum. The time span taken for each pump is reducing and the ROI is increasing. That's what we all want, right? Now, once we are moving in this parabolic shape to the upside, we can anticipate, yeah, we went up, we consolidated, then we pumped. Right now, we're kind of moving higher all the way from this 0.5 mark. We had a blast to the upside. We reached kind of 4x, that's 400% in a short duration. Now you have to understand this is a 3-day chart and this is like, 1 candle, 2, 3, 4 candle. So that's like in a span of 12 days. That's enormous, right? If you're looking at the market and in 15 days, if you're making such a profit like 400%, that's not a bad deal. Now, yeah, there would be one-off cases where you are seeing 10, 20, 50x in a couple of days or a week. Not everyone would be able to get on that one. Whereas when the market already shows you that this is a possibility, we are moving to the upside like this, you have a possibility there. Now, there's Ethereum chart combined with XRP. Now, what I want to highlight here is by the time XRP started this rally here was kind of 25 days late compared to Ether after Ether was breaking higher from a consolidation after the all-time highs, which is what we are looking at right now. We went above the all-time highs, we consolidated there, we are breaking through that now. So if that's the case, we are looking for next 25 days to show where XRP would be heading. Now, this is just history. It may not be exactly 25 days. It can be 20 days. It can be 40 days. We don't know. But that's kind of an average idea for you that the market is still moving to the upside. The trend is to the upside. Now we are just looking at general market, right? Say when the entire crypto market is kind of, consolidating as the Bitcoin is slowing down, altcoin market is going up. Now, in that one, when you're looking at the altcoin cap, you're kind of like last time after you reach here, we kind of had around 50-55 days of consolidation and then a move higher. So if that happened in altcoin market cap, that's a possibility even in Bitcoin. Now that's a possibility even in XRP once you reach above the all-time highs or closer to that range, right? Now come back to this chart where we are comparing Ether and XRP. You can look at the bottom. It was kind of similar, but the actual bottom for Ether was here. Now look at the top. It was kind of actually similar, or XRP was earlier than Ether. So it's just a matter of time and patience, because here XRP was late to the party for a month, and then while the coins were reaching the top, XRP came there early. Now that's something you have to understand. Patience pays off. Now this is a chart of Bitcoin on a monthly, and it's showing one candle has been closed in red on a monthly on a bull market where we were all expecting the price to go up, but at least the scientific investor family knew that we are slowing down. We exited from the Bitcoin and we were in the right assets we were riding. Now look at the history here. We had a couple of them before and then we continued higher. Then that 3 candle made the continuation pattern, right? So that's what you're looking at in the market right now. Even though I'm not a Bitcoin max here, I don't like it, the entire market is kind of leaning towards that. So if the price is breaking from here, it can go to 70, it can go to 80, who knows? But understand, you don't buy an asset at the all-time highs. You don't buy an asset when it's like 20, 30x way higher from the bottom, or you don't buy an asset which is like 200%, 300% higher than its all-time highs. You buy it low and slowly ride in the market, take your profits step by step, and you make sure that your risk exposure is reducing as the market is grinding higher. Why? We don't know where the market is going to reverse, and probabilities are that it can still continue higher. But reducing your risk should be something you have to consider. Now, look at this Bitcoin dominance. It's falling. If you remember in the last video, when we closed the monthly candle here below this, I told this is the probability. Those who have watched that video were prepared, right? We were falling all the way towards 44. Then we can anticipate 39, 35, 32. Fine. That's what we are looking at. Now, when that's happening in Bitcoin dominance and Bitcoin is slowing down like this, altcoins should pop through. Now, in that altcoin chart, if you are grinding onto a monthly candle, you can see the momentum is so high. We are way higher than the moving average. Now, do understand, when we are way higher than the moving average, we can still have a little bit of consolidation, little bit of fluctuation, meaning the volatility can come into the market. Because if you are looking at here, the price dipped 50% once, and now if you are taking it here to clearly measure that, it was 45% again. So even though we were in a bull market, we were continuing higher, we had these kind of fluctuations. Now, the step which you have to understand is, if you are trying to anticipate that such a correction is going to come in next 30 days, next 40 days, we don't know that's going to be correct or not. It can be, it cannot be. We don't know what's going to happen, but only stuff you are kind of sure about is, even though that happens, if you pay the price of being in the market through that volatility, you are still moving to the upside. What do I mean by that? Say if you bought somewhere here and you're going through this level of fluctuation, it was a 50% drop, but to the upside, that was 260%, right? So you're increasing your ROI. If you are just staying there, that's the best thing to do to reduce the noise in the market, because you're not taking much of a risk and you bought in somewhere in this consolidation. The market pumped here. Now, even if you didn't happen to get your profit at the peak here, say if we are kind of reducing this and looking at this, it's kind of 30x profit there, 35x profit, right? But even if you don't get that, you'll still manage to get that 200x. So this was like 35,000%, which gives you an indication like that's 300x actually. So that 300x and here 200x. Now that's not a small deal in wave 2. Now, as we were moving up, do understand that this was wave 1, this is wave 2, consolidating here, and then the blow off the top. So from the wave 2, if you are getting this, you're kind of reaching that consolidation phase at the top, distribution phase. Now that's wave 3 top, right? So when you get the symbol that wave 2 is slowing down, you can start taking your profits, because that's what we were all discussing about in different assets. Wave 2 top, different assets would show different symptoms. Say we can actually go to Ether in the last market cycle and look at this. It's somewhat similar, because at that time, other coins, altcoins, were kind of less in volume, so that kind of fluctuated that in that manner. But now when you go to XRP and look at it, it didn't go up much. It was kind of flat, and at the same time it was kind of giving you symbol that the market is being bought again as it's going down. So that symbol was always there before we broke out on the third wave. So XRP is kind of a clear case there, which indicates you, yeah, back then the manipulation was not that high, but right now looking at this, you can anticipate some manipulation in the market, or you should anticipate huge volatility in the market as we are going to such highs. That means from this top to this area, that was like 600%. Now if you put that into perspective, in this cycle, if you are taking that 600%, that's somewhere around about $25. So say anything about 18 to 24, 23 is kind of a risky area where you can be starting to consolidate. And as you consolidate in this market, it's better to take your profits, some of them out, at least 30-40% out, depending upon your portfolio and how you have positioned yourself. But once you have that portfolio out, and if it's dropping after this, say 40-50%, if you want to re-enter, you can re-enter into the market, or else you are just staying focused looking to generate wealth. Now, once you create capital in this market, you can actually look at all different markets outside this and position yourself. But if you are someone who has actually went through all these cycles, spending that 3.5-4 years concentrated in learning, educating yourself, you can take a break, because that consolidation is going to tend to be 5-6 months. Now, when you actually zoom in the same chart for XRP, stepping into a weekly chart, it's now like, okay, we are still in this range where we have actually moved up from this breakout, because this breakout was for a level here which was acting as a resistance and a support here. So that support resistance zone is still intact. We broke above, we came back below, we retested, and we bounced. Now, after the bounce, this is so necessary and it's so important for you to understand this price action. This was the close range of last 3 weeks, right? 1, 2, 3, we closed somewhere there. Now, that's not the precise horizontal stuff, but this one looks fine. So this candle which went above that and closed indicates you that the pressure of buying is way higher than what you can anticipate in the market. Now, if you go to price action analysis and look at candlestick patterns, you will understand this one, right? Once you are getting such an engulfing bullish candle, such a long candle, that shows you that the market still has a lot of buyers. So even if next week is kind of staying there without much of a movement, anticipate in a couple of weeks we are going to move higher, and that would be kind of a continuation pattern which we just saw in Bitcoin, right? That continuation pattern can happen weekly, monthly, 3-day, any way that can happen. Because if you remember, when we were looking at the 3-day chart here, and while we were getting slow bounce here, I told you this is going to be a 3-candle reversal where you are going through this particular range and move higher. And that kind of happened, right? You had this 3-candle reversal, you were moving up, you closed above this candle, near to the close of this one, kind of erasing majority of the bearish momentum, then continuing higher with another candle. Now remember, that's a 3-day chart, so each candle is 3 days. So started here and ended up here. In between, it had wicked down. Here. Now, what you have to understand from the candlestick analysis is we had some sellers there, but buyers pushed the price up back in green. Even though the sellers pushed the price lower, buyers saw that as an opportunity and they pushed the price up. So you can see something like this. Sellers pushed the price down to that support level, thinking that we can break to the downside, but buyers came in at that level saying, okay, this asset is undervalued at that time, at that price, so I'm going to buy. And they bought and pushed the price up. Now, what we have to eye is, last time when we reached around 1.96 was like, slowly the sellers were kind of stepping in, pushing back the price, and buyers were like, okay, I think we done quite well for the short term, I'll step back. Right, and then sellers took the control, they pushed the price down till 0.94, after which the same stuff happened. This region was kind of considered as a buying zone and buyers entered more. They put in more volume and the price bounced. Now, what are we looking next? We closed here around 1.77 in last 2-3 day candles. So that range is acting as an overhead resistance now. To get a bit more clarity for that range, you can zoom in, say use a daily chart. On a daily chart, this is what you see. You had kind of a hammer pattern there, which indicated that we are kind of slowly correcting. Now, understand the correction was not something huge, right? It was just 50% correction. If you are taking that from the top here on a daily chart till the bottom here, you came somewhere around 50-51%. That's fine. Now, yeah, a lot of guys would say, okay, that's going to be 50% drop. I'm going to exit the market and then re-enter. But they don't actually understand, say, for example, if their portfolio is 1 million here. Now, literally, let's take those into numbers, right? If your portfolio is 1 million here, somewhere around 0.6, and we went like 220% there. Understand that. Your portfolio was 1 million at 0.6 and right now you went to 20% up, your portfolio is like 3 million. Now from that 3, what they are considering is, say it dropped 50%, so that's 1.5. So you were kind of won million, and then even after the correction, right now you are like 1.5 million, and most of them are not happy because they saw that number of 3 there, but they are not looking at this in a way that, okay, once you bounce from here, once you cross through this all-time highs here, the recent highs, it's going to be a new high, right? It can continue higher because look at the MACD, it's crossing to the upside, slowly staying there. Look at the RSI on a long term. This is kind of a medium time frame where we are continuing higher, and if you step back to connect this from a long-term perspective, you're still getting this one there. You're bouncing at that support. So now you're looking at the top, as we pointed previously. If you connect these, you have still a long way to go in RSI, right? If you are looking at RSI, you are kind of looking some way at least about 90 towards 100, and right now the RSI is around 60. So that gives you an idea that we have a long way to go. But now, these are technical stuff which you are looking at. In the market, you have a lot of different assets to look at. And as you are looking at different assets, some are popping 5x, 10x. Some of them are really showing indications that they can pop 3 to 5x soon, right? And I've been posting that to my patrons. See, we are looking at different opportunities here. And a lot of them kind of completes their targets within 2 weeks towards 3 months. And that's not a bad deal. So if you would like to get these kind of updates for different assets in your portfolio, you can look at the Patreon. The link is given in the description below. Most of the tiers are getting sold out. We are getting a lot of new members. So if you would like to, you can make it fast. Now let's get back into this. When we are anticipating such a stuff, don't be negative in the market. Instead, if you have dry powder, shoot it out here if you want to. Now, if you are a trader, that's fine. If you're an investor, that's going to be increase in your average. If you're positioned way lower in the market, like 0.2, 0.3, you don't want to increase your long-term bags average, right? You don't want to chase the market. Now, what we are talking about here is about an asset which can solve these issues. When you have such a huge impact on the economy, with such a utility, it's going to be pushing you to that stage. Say, big banks see challenges, opportunities in central bank digital currencies. So that's a huge stuff to read through. Now, if you're actually going through that, you need to understand first they are talking about the risk and then the reward. What is the risk there? The risk is actually for banks, basically, right? The traditional banks. Because if it's a retail central bank digital currency or a wholesale central bank digital currency, the amount of money which the corporate banks are looting from you and me when we are having any kind of value exchange is going down. So that means their profit margin is going down, but our pockets are going to have more money because they are going to cut less out of it, but they'll still look at areas where they can kind of cut money more. Even though technology is creating wealth, even though technology is giving you money, the problem here is like the governments don't want you to be rich. What would they do? They would just say, okay, you did all the hard work, you made billions, fine, now it's time to give it back. Now it's like, give it back to whom? If it's you who worked to reach there, no one else gave you that money, why would you give back? So that's why we see a lot of guys moving out of countries where they are kind of proposing wealth tax, where they are kind of going to increase the capital gains tax. Like a lot of people are being attracted to Singapore. A lot of people are going into countries where they have zero capital gain tax, or moving into the same country. Within that country, they would have some kind of Puerto Rico there, right? Where the tax rates are lower and you have some conditions to be met. Yeah, I agree. But a lot of guys are actually moving out because they don't want to pay this. Because if the government didn't help you to make this money, you're kind of thinking, okay, no one helped me to make this much, so why would I actually pay that back? Now, if it was a fair amount, like 5%, 10%, 15%, or even 20%, they'll say, okay, that's fine. But 50%, 40%, even 35, 40, 50, whatever it is, it's too high. So in that same sense, now you're going to see a lot of people making money in this market cycle. So if you want to be one of them, do position yourselves well. Learn on a regular basis. Position your portfolio in such a manner you're not just in one asset. If you want to, you can do that. But if you are riding at least 5 to 8 assets, in my opinion, that's kind of giving you an edge over a lot of others who are just in one coin. But understand, once you get to this level, you don't know which coin is going to pop off. First, we know that majority of them will go up, but the question is what would be the ROI and when you should take the profits and step back into a different asset. So guys, hope you received value for your time, and if you really did, please do support the channel. Hit that like and subscribe button if you haven't done that already. If you would like to get these kind of charts and updates, again, you can look at the Patreon. The link is given in the description below, where we chart a lot of different assets for you to have that idea while you trade or invest into them. So guys, I'll meet you in the next video. Bye for now.